Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 21st of April. Starting off with the FTSE 100, which is consolidating well after that red candle earlier in the week, but it looks like a mid-move consolidation above a rising 50-day moving average. That tends to be a decent momentum generator, and we're looking for basically the 8,000 area, which was the old February peak, record peaks. Over the next week or two, and then perhaps as high as 8250 at the top of that rising trend channel from September as soon as the end of next month. At this stage, not expecting anything much below the broken February resistance line around 78.10, and certainly probably the most on the downside, the 50-day line at 77.20. Moving on to the DAX, which has been a better market than the FTSE over the recent past. Here we're basically we made new highs versus February, which is obviously quite impressive. Ideally, we stay above 15,700, the February-March resistance, and can then head up towards the top of that rising trend channel from September, as high as 16,500 by the end of next month. On the downside, below 15,700. Risk a move to the 50-day line rising at 15,400, but we're not expecting anything lower than that at this stage. On to the Dow, where I suppose one can already guess that it won't have cleared that one-year resistance line at 34,100. Here we're below that level. Looks as though there's a temptation here to try and test the 50-day line around 33,100. But ideally we'll get away with that and just trade down towards maybe 33,500, which was, I suppose, the initial range that we had to start April. End of day close above, or end of week close above 34,100. We could be heading towards 36,500 over the following 4 to 6 weeks. Moving on to Bitcoin, which was looking a bit soggy yesterday. Here we've got a situation where we were hoping that this market would stay above the March, early April resistance at 29,000. That's not happened, so it looks like we've got to risk a move down to the 50-day moving average around 26,700, even if the market then heads back higher up to the top of that channel from June last year as high as 32,000. That seems to be the range at the moment. On to the stocks, and we have Alkemy to start. Well-received update yesterday, and the shares now breaking through the 50-day moving average at 220. Above that, on an end-of-day close basis, we're looking at £3 at the top of that rising trend channel from July last year. Time frame on that, hopefully, by the end of next month. At this stage, only well below the 200-day line of 180, really delaying the upside scenario. CloudCoco is next, and here we got a situation where the shares look like they're going to make progress within that broadening triangle from July 2021. Top of that triangle as high as 1.9 pence. Maybe that could be hit over the next couple of months. The reason for inclusion today is that we've gapped up. It's a bear trap gap reversal through the 50 and 200-day moving averages, and that suggests that there's some momentum behind the latest move. End of day close above where we are now basically should be the trigger for a move towards 1.9 pence over the next 1 to 2 months. On to First Tin, where looks like we've got a bit of a recovery here. Here we've got a little bull flag forming at the floor of the range, basically, for the shares, and that suggests that after being so oversold over the recent past, the shares are ready to push higher. If you're cautious, you wait for an end of day close through this week's peak around 8.2 pence, and then target up to the 200-day moving average at 11.25 pence over the next month or so. Big picture target, maybe next 1 to 2 months, would be back up to the top of that triangle from the summer of last year as high as 17 pence, but obviously that's a long way away at the moment, and the upside valid at least while we hold above the 7 pence level. Moving on to a stock which I don't really look at very much, but here it is today, Griffin Mining, and here you can see that we've got a reasonable setup here with the triangle that the shares have been in since basically this time last year. Unfilled gap to the upside through the 50 and 200-day moving averages, so we're looking for that July resistance line as high as 103 to be hit as soon as the end of next month. Upside value while we hold above the 80 pence region. On to one of the best performances of the recent past. Here we've got Kodal, which is stretching yet higher, just breaking out of the recent bull flag. The last peak there around 0.86, and above that we're looking for as high as 1.1 pence at the top of that August rising trend channel by the end of next month. Only really well below 0.8 now, really delaying the ongoing upside scenario. Moving along to a stock which is performing reasonably well at the moment, Oxford Cannabinoid. Here you can see we've got a rising trend channel that's been in place since the turn of the year. Support points coming in above the rising 50-day moving average. Already got the 200-day moving average rising. So the V now is at above 1.25 pence. We're looking at 1.8 pence as soon as the end of next month. RSI through the 50 level as well, so that's looking encouraging. Big news yesterday for Ondo, and managed to interview the company as well. Very interesting situation at the moment. Here we've broken the initial target of 11 pence. Above 11 pence, we're looking for the top of a rising trend channel, which I'm going to try and reveal now, as high as 19 pence as soon as the end of next month. But it's a good sign there that we found support at 11 pence at the old perceived resistance on the way down. Moving along to Synergia, where there is a decent recovery, or sort of a decent attempt at recovery, let's say. Here we've got the shares just trying to break through the 200-day moving average at 0.12. Above that, we have the chance of a retest of February resistance as high as 0.2 pence. So let's see if Synergia can step up to the plate. Obviously, we don't want to see the shares back below 0.09 ahead of any potential break to the upside. On to UK oil and gas, which actually has a very decent looking setup here over the near term. The reason for saying that is that we had an unfilled gap to the upside earlier this month, so it's a bear trap gap reversal with a rising 50-day moving average, and now we're through the 200-day moving average. Initial target here was 0.09. Hopefully, we're hoping for 0.12 as soon as the end of next month, which is a January resistance line projection. Finishing off with Zanaga, and here you can see that the shares have pushed higher, just found support at old resistance there around 7.25 pence. Above 7.25, we're looking for the shares to hit as high as 10 pence by the end of next month, perhaps even sooner than that. And hopefully that'll be the minimum on the upside, given the way that the 50-day line is now rising along with the 200-day line, and we've had an unfilled gap to the upside and then a bull flag as well for the shares. That's it from me today. More updates over the weekend.